Good afternoon, investors. You are now on Kleverstock with me, Ainun, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Kicking it off with the Bursa Malaysia updates. Bursa Malaysia opened slower on Thursday in line with Wall Street's weaker overnight performance. At 9:10 a.m., the FPM KLCI eased 2.53 points or 0.15% to 1,638.91 from Wednesday's close of 1,641.44. The index had opened 1.21 points lower at 1,640.23. Market breadth was negative with 185 losers outnumbering 140 gainers. A further 260 counters were unchanged while 2,191 were untraded and 12 suspended. Now, turnover amounted to 137.70 million shares valued at 72.42 million ringgit. Akutin Trades Neighborhood Vice President of Equity Research Tong Pat Lang said overnight Wall Street ended broadly lower as traders continue to rotate out of artificial intelligence AI related stocks, sparked by a report regarding Oracle's primary investor pulling out its $10 billion data center project. He said that although Oracle has refuted the selling point spread to other mega tech stocks as well. He said, on the home front, we believe the FPM KLCI will continue to surpass expectations as we usher in 2026. Therefore, we expect the index to hover within the 1,640 to 1,650 range today. Among the heavyweights, Maybank gained 2 cents to 10 ringgit and 32 cents. Public Bank and IHH Healthcare were flat at 4 ringgit and 41 cents and 5 and 8 ringgit and 59 cents respectively. While CIMB fell 3 cents to 7 ringgit and 89 cents and Tenaga Nasional slipped 2 cents to 13 ringgit and 22 cents. On the most active list, TWL and BMS remain unchanged at 2.5 cents and 20 cents respectively. Top Glove added 2.5 cents to 67.5 cents. Hartalega garnered 3 cents to 1 ringgit and 4 cents, and VS Industry inched up half a cent to 48.5 cents. Top gainers included Petronas Gas, which climbed 10 cents to 17 ringgit and 86 cents. Westports added 7 cents to 5 ringgit and 68 cents. Hong Leong Industries rose 6 cents to 15 ringgit and 96 cents. Press Metal, Aluminium and Itmax System advanced 5 cents each to 6 ringgit and 94 cents and 4 ringgit and 75 cents respectively. Among the top losers were Dutch Lady Milk, which fell 66 cents to 30 ringgit and 4 cents. Petronas Dagangan lost 12 cents to 19 ringgit and 22 cents. Nestle eased 10 cents to 113 ringgit and 70 cents. Sunway Construction was 8 cents lower at 5 ringgit and 72 cents, and UWC slid 7 cents to 4 ringgit and 19 cents. Moving on to our local currency and foreign exchange, the ringgit opened higher at the 4.07 level against US dollar, the best level seen in close to 5 years, despite a firmer US dollar index DXY, as market participants continued to assess the US Federal Reserve's Fed policy outlook. At 8 a.m., the ringgit strengthened to 4.0795 or 4.0915 against the greenback from 4.0855 or 4.0940 at yesterday's close. The level was last seen on March 3, 2021, when it ended the session at 4.0720 against the US dollar. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzanizam Abdul Rashid said the US dollar index rose 0.25% to 98.389 points as the latest comments from the Fed officials indicate that they are not in a hurry to reduce rates. He said Fed Governor Christopher Waller suggested the prevailing policy rate remains 50 to 100 basis points above its neutral rate and that the Fed has room to cut it further. Waller said reported as saying there is no urgency to adjust policy immediately as the labour market is weakening at a gradual pace. Now, Muhammad Afzal Nizam said yesterday the ringgit closed 0.10% lower against the US dollar. Therefore, expect the ringgit to exhibit range-bound trade between 4 ringgit and 8 cents and 4 ringgit and 9 cents today. At the opening, the ringgit was mostly lower against a basket of major currencies. It fell against the British pound to 5.4555 or 5.4716 and was lower against euro at 4.7897 or 4.8038. However, the ringgit gained against the Japanese yen, rising to 2.6236 or 2.6315. Now, in contrast, the local currency strengthened against its ASEAN peers. It appreciated against Singapore dollar to 3.1592 or 3.1688, improved versus the Thai baht to 12.9467 or 12.9930, advanced against the Indonesian rupiah to 244.3 or 245.2, and rose against the Philippine peso to 6.95 or 6.97. Now for some local economic news. Economists are saying that Dato Sri Johari Abdul Ghani's pledge to review Malaysia's trade agreements with the United States is a timely and strategic move. By refining the agreement on reciprocal trade, they say the nation can push for greater reciprocity in market access, strengthen investor confidence, and position itself as a competitive hub for US businesses in ASEAN. The was signed on October 26 during the 47th ASEAN Summit and is set to take effect 60 days after both parties complete their domestic legal procedures. Now, Johari, who was recently appointed as the Investment, Trade and Industry Minister, said the review is aimed at ensuring the trade agreements benefit the country's economy as a whole. The minister said that protecting and strengthening Malaysia's economy is critical amid rapid changes in the global landscape. He added that the key economic indicators are showing uneven growth in domestic trade and small and medium-sized enterprises (SME) sector. His early efforts will include assessing economic data, consulting ministry officials, and presenting informed recommendations to the cabinet. UniKL Business School Economic Analyst Associate Professor Dr. Aimi Zuhazmi Abdul Rashid said Johari's proactive approach in reviewing the agreement signals Malaysia's intent to refine trade terms and strengthen its position with the US. He said that although the has provided stability for Malaysian exporters, further refinements are expected as the agreement comes into effect 60 days after both countries complete their domestic legal procedures. He said also provides for good faith consultation between Malaysia and the US regarding implementation issues before either party can take action against the other. Aimi added that the country is ahead of many regional peers that have yet to finalize agreement with the US, giving the countries a strategic lead in attracting foreign investment. He said Johari has correctly identified that SMEs need to be included in the various industries' supply chain in trade with the US. A clear strategic action plan is needed to boost and elevate the businesses into the global circles. SMEs can act as supports in terms of vendors, research and development, and many others. Still on local economic news. Malaysia's economic success since independence, which lifted millions out of poverty and transformed society, may be losing steam as the country moves into its next phase of development, said by a new academic study. A chapter published by Oxford University Press said the development model that helped Malaysia grow rapidly in its early years may now be reaching its limits. The chapter, titled Fragmented Personalistic Capitalism in Malaysia, appears in the book Southeast Asia's Development Towards Liberal Individualism and Inclusive Governance. The 40-page Chapter 3 is written by Dr. Carmelo Ferlito, Chief Executive Officer of the Centre for Market Education, together with Benedict Wirasena and Imran Shamsunahar. Now, Malaysia has evolved from a commodity-based economy where primary goods made up almost 80% of exports in 1960 into a diversified upper-middle income country. However, several long-standing challenges remain. These include continued reliance on foreign investment, limited growth of local entrepreneurs, the strong presence of government-linked companies, and ongoing weaknesses in skills and education. The authors said these issues are not only economic in nature, as political and institutional factors also shape how quickly reforms can take place, making change slow and complicated. They said weaker productivity growth and limited innovation are linked to the way Malaysia's economy is organized, where business activity often depends on personal connections and close networks. Now, while this system helped provide stability in the past, the study said it may now be holding back competition, business expansion, and the move into higher value industries. Now, to address these issues, the authors called for gradual reforms, including stronger industry consolidation, more open and competitive markets, and deeper integration with global trade. We'll now take a short break, but don't go away. We will return shortly with corporate news developments. Welcome back to the Midday Roundup. Let's continue with corporate news developments in Malaysia. HI Mobility's Berhad's growth outlook remains compelling, supported by Johor's accelerating infrastructure rollout, which is expected to structurally lift cross-border commuting, tourism and logistics flows. CIMB Securities Sunjam Berhad said key catalysts include the Johor-Singapore Rapid Transit System RTS link and the Johor-Singapore Special Economic Zone with potential RTS feeder route contract awards seen as near-term earnings drivers. In a note, it said, meanwhile, HI Mobility's expansion into the commercial segment through the acquisitions of Acacia and Handel BCM adds another leg of growth. Overall, we project a robust 26.3% compound annual growth rate in core net profit from financial year 2025 to financial year 2028. Now, CIMB Securities maintained its earnings forecast and reiterated its buy rating on the stock with an unchanged target price of 3 ringgit and 10 cents. On financial performance, the research house said HI Mobility's cumulative 9-month results were broadly in line, accounting for 79% of its full-year net profit forecast and 80% of consensus estimates. The group recorded a net profit of 41.25 million ringgit on revenue of 235.25 million ringgit for the 9-month period. For the third quarter ended October 31st, 2025, net profit rose 6% quarter-on-quarter to 14.7 million ringgit, while revenue increased 3.7% to 82.2 million ringgit, driven mainly by stronger contributions from its cross-border scheduled bus services. The average daily cross-border ridership grew 2.1% quarter-on-quarter to 68,192 passengers. This was partly offset by higher depreciation and finance costs following the delivery of additional buses for new contract rollouts. No year-on-year comparison was available, as this marked only the group's 4th interim financial report since listing. HI Mobility declared a second interim dividend on 1 cent per share, bringing its 9-month financial year 2026 dividend per share to 3 cents, in line with CIMB Securities' full-year forecast of 4 cents. Up next, we have some business news update. Top Glove Corporation Berhad emerged among the most actively traded stocks at early trade today after posting a strong business performance in the first quarter of its financial year 2026, which ended November 30th, 2025. At 9:50 am, the company's shares rose 2 cents to 67 cents with a total of 23.35 million shares traded. In the filing with Bursa Malaysia today, Top Glove's net profit rose 38.58 million ringgit in the first quarter of financial year 2026, up from 5.47 million ringgit in the same quarter last year, driven by robust sales volume growth across key markets, particularly in the United States. However, revenue for the quarter under review slipped slightly to 883.57 million ringgit from 885.59 million ringgit previously, amid a challenging and competitive environment. Meanwhile, Kenanga Investment Bank Berhad expects Top Glove's earnings to gain further momentum in financial year 2026, driven by higher sales and stable margins. In a note today, it said Top Glove expects higher second quarter financial year 2026 volume sales quarter-on-quarter, driven by shipment delays in the first quarter financial year 2026. US orders and better showing in Europe on the back of full quarter contribution from a tender secured there. Therefore, we iterated our outperform call on Top Glove with a target price of 75 cents per share. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Gamuda Berhad and Samsung C&T have secured a 2.7 billion ringgit contract in Australia for the Mariners Link undersea cable project. Paramount Corp Berhad is acquiring 48.49 acres of leasehold land in section U9 Shah Alam for 113.5 million ringgit via subsidiary Prima Kuasa Senjern Berhad. With approval secured, the 579 million ringgit GDV project will span 6 years. Jati Tinggi Group Berhad secured a 117.2 million ringgit contract from Tenaga Nasional Berhad for a 275 kilovolt bulk power supply connection to a Johor data center. Muhibah Engineering M Berhad, via its wholly owned subsidiary, had secured a contract to sell an offshore supply vessel for about 18 million US dollars or 74 million ringgit, with completion expected by the first quarter of 2026. And last but not least, Silver Ridge Holdings Berhad secured a 42.9 million ringgit contract from the Ministry of Education to supply laptops to Sarawak teachers. Now that's a wrap for Midday Roundup with me, Ainun Jaria, on Kleverstock. Thank you for choosing us, investors. Stay tuned for our upcoming live stream programs.